In this video, traders, we are going to look at position sizing rules to consider. Stay tuned. Hey traders, warm welcome to you. Alright, so position sizing rules to consider. You've probably all heard some of the most basic ones. And you know what? They're a good starting point. I don't have any problem with some of the basic ones. I think, yeah, you know what? If in doubt, keep things small. I'm a big advocate for just trading small. And when you're ready, start to size up. Guys, the market will always be here. There's always going to be opportunities. And what you don't want to do is dive in straight away, hammer half of your account, and then be trying to claw it back and have that mindset of got to get it back. It's just a really bad place to start. So if in doubt, keep things small. So this is why, the basic rules are risking 1 to 2% of your account on a position. And that makes perfect logical sense. The idea of that is that you can have many losers and it's not going to damage your account too much. The downside of that, and why I don't think it always works, and it's very dependent on your risk tolerance, it's very dependent on the amount of money you've got in your trading account, it's dependent on a lot of things, is that can take you an awful long time if you're trading a swing trade once a month even, to make any money. Because even if you've got 4 to 1 and let's say you win every single trade, which is not even possible, even then you're kind of thinking, well, I'm not making that much from the whole, from what I'm doing, from the effort I'm putting in. And even less so if you're trading far fewer trades. Obviously for day trading, you might have many trades, so your risk is much higher. And this comes to the final point in a moment. So risk what you consider is right. Don't go crazy and start risking half your account on a trade, even if it's a small account, because you just won't make any money, guys, because it's just a bad luck trade, a normal condition trade, stop you out, it's game over. I think under certain conditions, going 5, maybe 10%, I'm saying this with caution, and guys, disclaimers as usual, you need to do your own due diligence, don't expect to lose money and all that other stuff. But I think under some conditions, then you can ramp it up. An example of those conditions might be, okay, you've had a good run, you've built your account up nicely, now you've spotted a grade A play that you really think you want to hit. It's got a good risk reward ratio. You can scale up into it. Many things where you think this is worth risking a decent chunk of your account. It's not something you do every single time. And obviously you've got to be the trader who is prepared to be dynamic with position sizing here. But let's say it is a trade that has been working well, it's got limited risk, and you've got all the attributes for it, then by all means, you can make your own decision on this, push the throttle a bit and go 5%, 6%. 10 might be pushing it a bit, but at the end of the day, guys, if you're trying to grow your account aggressively, let's say you've got a relatively small account, you know what, I need to get this account up quickly, I'm prepared to risk 10% or whatever percent to do that, I've built some up, I'm prepared to risk some of the profits I've made, I know this is a good play, then you're an adult, you can make that decision for you. I don't think everyone should be put into a box of the 1 to 2%. I think it's 1 or 2%, I think it's good. I think it makes sense logically. You don't want to, because if you're losing. If you're doing 10% all the time, 10 loses, you're out of the game. You're out of the game unless you're dynamically adjusting the position size, of course. But you get the idea. Whereas you 1%, 2% take you far longer. So, I think that under special conditions, you can be, if you're that type of trader, you can be a bit braver. You can go, you know what, I'm going to push the throttle down. I want to kind of shoot a little bit, swing for the fences a little bit. Take the medicine if it's wrong, take my 10% if it's wrong. Am I prepared to do that? Am I prepared to have a 10% drawdown? Yes, I am. It's worth it because I might make 30 on this and it might really boost my account. And yeah, I know I'm going to get people say this is ridiculous, blah, blah. It's real world trading, guys. Sometimes if you want to risk stuff and you want to have a little go at something, you want to have a crack and you think it's right, you push the throttle down. And many great traders will do this as well. If you read in books, they will say, hey, you know what, I pressed the throttle here. It was a lot of risk, I took it, I knew when to press it, but you've got to know when to press it as well. So normal standards, industry standards, if you like, 1 to 2% of account, special conditions, 5 to 10%. Again, risk disclaimers, know what you're doing, think about it, recognize you might lose money and all that kind of stuff. And recognize most people lose money as well. The third thing, guys, increase or decrease size monthly. So, when you're doing your position size, I'm not a big fan of recalculating it every time, being really strict and saying, oh, you know, now you've got this much in your account, you've made 2%, I need to increase my position size by X. Don't bother with that. Unless your account has gone over milestones, just do it monthly. So milestone might be you've made an extra 10 grand, you made an extra grand, you made an extra 500 quid, whatever the benchmark is for you, then you adjust your position size rather than constantly adjusting it and tweaking it and being extra precise in it. Just an extra level of cognitive load you don't need. The fourth thing, guys, is size according to the setup. I talked about this before exclusively, but it's tempting to want to dial up the size because it's something you like, which is different from the setup being or dictating the position size. So the setup says, okay, the stop should be here because this is where my thesis is negated. Right, fine, now I need to know where my entry is, what my position size is going to be, work back from that. Rather than, I only want to risk £800 on this trade, where can I put my stop? I want to trade £10 a point, for example. Oh, okay, where can I put my stop that allows me to do that? And that's reverse thinking. It's a flip on its head. My stop is here, my entry is going to be here. Well, that's the distance in pips, ticks, cents, percent, whatever you're trading. What's my position size going to be? Wrap it back from that. So always thinking in that terms, rather than, you know, this is still thinking in setups, but actually going, you know what, I'm going to risk a little bit more. My position size is going to be a bit more, but still working in terms of setups, working in terms of where stop loss is going to be based on your strategy, which for most of us is using charts. Okay, so the other one I've got, guys, is don't compound risk with similar positions. Easy to do. You know, people say, oh, I'm risking 1 to 2%, but then they've got 50 different positions which are all correlated in tech, or they're all correlated with gold, or all correlated with dollar. And it's just skewing the whole game. It's skewing the whole thing. You know, so whilst it sounds good on paper, I risk this and this, but you know, if they've got a plethora of stuff that's all correlated, you know the score, guys. Everything's going to move in sync. Market falls back. You've got, you know, a basket of stocks, tech stocks, 1% risk on each. You know, they all suddenly rock back. You're going to get hammered on them. So understand your correlation and risk with your positions. Now, the last one, which I think is the most important one, this is the one that I think is overlooked so much. And guys, made the mistake myself, you know, overlooked this kind of thing. It doesn't matter so much the risk per trade. I don't think it matters as much as the risk you're prepared to take per day, per week, per month, per quarter. Because what that doesn't take into account is how many trades you're taking. If you're taking one a quarter, fine. Your risk is 1% plus 1% plus 1% plus 1%. Very, very simple. If you're taking a trade every 5 minutes, well, hang on a second, all of a sudden you've got a chance of blowing up if you're not adjusting your position size based on your account value. So that suddenly becomes, you know, much more risky, and you get into a false sense of security thinking, I'm only risking 1%, I'm only risking 2%, I'm fine, but then you stopped out. Before you know it, you've wiped out 10% anyway. This is the logic, guys, for doing this, is that very often, and this is why I kind of come up with this, is that very often you've got into a trap where you've taken 10 rubbish trades, and you might have lost 1%, 10% by 10 bad trades. You think, well, actually, if I just waited for the sweet spot on one trade, I could risk what I risked in that day or 2 days a week on one good trade a month, and use that 10% risk in that rather than 1% losing trades. So think very carefully about your daily, your weekly risk. To me, that's the most important thing. How much are you prepared to risk a day? How much are you prepared to risk a week, a month, etc.? Then work it back from that and go, right, well, I'm prepared to risk 10% a month, for example. And I'm going to say, okay, so I want to grow by X, blah, 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 maybe it's on the high side, but just number it out the top of my head. Okay, so work back from that. How many trades am I taking a month? Well, I'm taking, 20, I'm taking this. Right, so how much, worst case scenario, if you lost every single trade, would that make it that amount? Okay, well, maybe I need to risk this amount and that amount and that. So you start to backtrack it and you start to realize, actually, there's my risk. But here's the key. You might open up a complete different door which says, I'm trading too much. That's a perfect example. You're prepared to risk 10%. You're doing 20 trades a month. How much risk are you taking per trade? Hardly anything. It doesn't seem worth it. So you say to yourself, okay, well, if I'm making money on every single trade, that's going to be okay. But actually, if If I lose money every single trade, I've got to account for that. I'm over my limit. So why don't I start to dial back the number of trades I'm taking? Why don't I start to be very much more focused and careful about the setups I'm taking? Then you start thinking a different dimension. You start thinking, well, my monthly risk is X thousand, X hundred, whatever it may be, but I'm only going to take maybe 5 trades a month. I'm going to take 1 a week plus an extra, whatever. Okay, so now I can start to risk a little bit more per trade, because otherwise, you know, I'm kind of just hoping that each trade's going to work. And that's fine if you've got a scalping strategy that you're relying on the law of averages and numbers and stuff, and you can kind of almost go, well, I'm not going to lose every single trade. I'm taking 10 trades a day. I'm not going to lose 10, but you still got to work it back. So this is something to think about, guys, is not only your risk per trade, but first off, start on how much you're prepared to risk in the month, in the week, in the day. How many trades you're likely to take, or maximum you can take, and then work it back from there. Because you might find the number is way different to what you expect. You might find that, hey, you know what, I can afford to risk a bit more. Or you know what, I'm risking way too much even at 2%. Because I'm taking so many trades a day, I could end up wiping out my account within a month if I'm not trading well. So this is where the hidden risk is, guys, understanding how many trades you're taking, the total risk, and then working it back from that. And of course, the other things as well, increasing size monthly or every sort of benchmark in your P&L and adjusting the size according to the setup. Whatever you do, guys, take care, keep your risk managed. Don't take my advice on anything to do with risk. It's very personal to you, but just some ideas and some things that I do that maybe will help you. See you next one. Bye-bye.